Hey everybody, welcome back to Pete Trades. Today I'm going to be analyzing the one trade I took, the bad trade I took, but it's okay. It's okay to make a dumb mistake because guess what? Everyone makes mistakes, even pros, and the fact is now that I'm risking an appropriate amount, it didn't phase me. I didn't unravel. I didn't go, oh my shit, I just lost this much money. And have a horrible day and be emotionally negatively affected by it. Um, it's not a big deal. So it's all good. So yeah, let me share my screen. This is the bad trade I took. It really wasn't that bad. I got short here after bar 13, and then I shortly got out after that bar closed. Moved to the stop right above that candle for about a 10-point loss. I think what did I lose in total? $20, $21.50. So it's nothing. It's less than half an R, and that was my only trade for the day. Yeah, market came up pretty strongly off the open. I almost took a pre-market trade. I obviously wish I did, going for the gap close. The bar right before the open was indicated it was bullish, and the EMAs this morning were bullish, right? So that means like it is a good time to get long for a gap close. Sorry about my dog barking in the background. And then the gap did eventually close. So you could have got in here, targeted up here, made over 100 points in the first hour. Just exactly the first hour up to 10:30 Eastern. But even still, just capturing that first bar would have been a nice 2R trade. And it would have been good to be out around 8 a.m. anyways, because very volatile here with the Jerome Powell's speech. If you pay close attention to my charts, you'll notice I have added a fourth key level. Typically, I only trade with the prior day low, which is this blue bar, the prior day high, which is this red bar, and then the prior day close, which is this dotted gray bar. I've also added a prior day, or the current day open, which is this green dotted bar. At the suggestion of a pretty profitable and successful viewer, he suggested that I look at mainly longs above this green line, wherever the open is, and mainly shorts below. Now, I'm not going to make that I think I already have enough parameters and rules around my trading, like only going long when the 9 is above the 21, only going short when the 9 is below the 21. But he raises a really good point, which is the market, the guys that really move the market, they're not focused on the 5-minute. They're focused on the hourly and the daily charts. This is what this is the time frames they're trading, and this is what they're focused on, right? And he thinks that, or his claim is that if I focus on being long above this, key level, I'll just have better success rate. I'll be able to hold for longer, and really, trust the trade more. So obviously today, hey, we had there was a pretty good short opportunity on the MNQ around like bar 20. Well, I guess technically not bar 28 because the 9 was still above, but or maybe make sure it's on market hours only because that might have impacted it. Yeah, market hours only. Yeah, so bar 28, we had a crossover, it was about to cross over. It was crossing over, and this might be a little bit of like hindsight bias analysis because it actually, the only reason it crosses over after is because it plunges down pretty hard. But I don't know. I think bar 28, I don't know. In fact, actually, I'm lying to myself right now, and I'm admitting it in live time. According to my plan, this is not a good buy or short signal because there's wicks on top, lots of wicks on top, and lots of wicks on bottom. This is chop, so this wouldn't actually be a good trade. So I'm kind of lying to myself, actually, that this is a good short trade. Bar 30, you could make a better argument that this is you could target for a little bit more of a move, maybe down to this pivot. That's it'd be like a 40-point move. And hey, it would have hit, and it would have hit the prior day low. But as soon as it hit the prior day low, look, it turned around and it would have gone up and retouched the prior day close, and then I think it would go on to touch the prior day high. No, it wouldn't. But there are buyers that stepped in at this key level. Doesn't really mean much to me because I'm not allowed to go long down here according to my plan, and I'm always going to respect that. So that's just what it is. Bar 58, I think this is an okay long because although it's like ranged and chopped quite a bit today, it's not like rangy here. There's not tons of wicks, and it looks like bullish move up. It makes sense that it would consolidate once it gets back to around the 21. Once these EMAs start to level out, that means hey, maybe we could have an expansion move. You could target up here, stop loss entry above, stop loss below, and then profit target, just above the recent highs. But really today wasn't that good of a day to trade. I knew that I didn't expect it to be that great because tomorrow is CPI, one of the biggest economic events that comes every month, probably the biggest besides non-farm payrolls. It really moves the market a lot, and the market is typically quiet for a day or two before CPI anyways, so I was playing pretty safe, pretty conservative, I didn't want to risk. It wasn't a risk on day. Tomorrow, I'm definitely going to be looking for bigger moves. I'm going to challenge myself to hold for longer. Maybe I'll take a pre-market trade. That has been pretty successful for me. But yeah, I'm also going to take note of, hey, this key level going long above, short below, and really just focusing on this hourly chart here. What's happening with this? It's very rangy right now. The hourly chart is. This is since last Thursday. It started chopping around this area. Well, it's a week later almost, and we're still just chopping around this area. This is Feb 6th over here on the left. This is February 6th. And pushed down really hard. So there is a kind of a vacuum in here where price is just getting sucked to the middle, and it's pretty choppy. So if we open up down here tomorrow, I'm predicting a gap close to the long side. I'm predicting that we'll have a bullish move. And in fact, today I kind of expected once we close to this gap, it would just range for a while because it's made its measured move. It's put in its big move. It's probably not going to happen again. Hourly EMAs are bullish on the two of the major indexes, the S&P and the NASDAQ, and then RTY, they're bearish. Sorry, it's pretty distracting with my dog in the back. Gotta check my phone. Okay, not my best performance, certainly not my worst. Check my stats. Trading plan, I did add this a little bit here. Key levels. I won't track this underneath the measured move though. I'll track this. Alright, now my dog is in the bed. What's up, man? I don't know if you guys can see him. Look at. Say hi to the YouTube. He's a very good dog. His name is Brutus, and he's a very, very good boy. Okay. He's a gift from my now fiance's dad. They had a couple of them, and yeah, it's cool. So key levels. I don't want to like overcomplicate the plan and add too much. Um, key levels. Soft rule. Longing. Watch them. Soft rule. So soft rule, longing, above days open, shorting below. Yeah, that works. Alright, I gotta answer this phone call, so I'll end the video here. Thank you for watching. Peace. Have a great day. Bye.